Hi, this is Akmir with the Bulletin Board Heroes. It is Wednesday, the 7th of September. This day is 56 years ago. The charting began, and luckily the voice is the last to go. Starting off with the FTSE 100, and we've got the market back, bouncing off that two-year uptrend line, which we've been hoping that it would do. Almost exactly doing that, so that's 71.86, the low of the day so far, so that's good news in a way, but we'd like to get out of that little range that we're in between the two-year uptrend line and the 50-day moving average at 73.40. So if you're wondering which way this market's going to turn, then an end-of-day close outside that 71.80 or 73.40 band would do the trick. I suppose by definition, as we bounced off the support line, one has to give the benefit of the doubt to that, even though the RSI currently around the 40 level is not in a great place. That does suggest that there is a risk of a potential break below 7,200 and hopefully a final retest of 7,000 for the FTSE 100 above the 50-day line, 73.40. Then it's up to that April resistance line up towards 75, which seems obviously rather unlikely at the moment given the macro situation. On to Bitcoin, which is similarly difficult in terms of its antics over the recent past. Here, what should be happening is that there's another leg to the downside, and as I said before, I think earlier this week, where we are on the chart now for August and September is just below the 50-day moving average after a rally through it, and the 50-day line also falling now. That's falling around 22,300, and in that way, that's an analogous position to where we were April to May, where we had the rally through the 50-day line and then failed below it, and then there was a new leg down. So Bitcoin looking rather vulnerable at the moment. End of day close below 19,000, i.e. below the initial July support, could take this market reasonably lower. So that means we're looking towards not only the lows of back in June around 17,700, but perhaps towards the 15,000 area or even lower. Worst case scenario would be the bottom of that November falling trend channel as low as what's that pointing to at the moment, as low as 8,000, which sounds rather unbelievable, but that is the current configuration for this market. Saving grace is that the RSI is oversold now, so there is a chance of just a little jiggery pokery between 17,000 and 18,000, and then the market bounces back. Maybe that's the best way of looking at it at the moment. Moving on to the stocks, and starting off with our expiration, where I suppose the main mystery here is why it has taken so long to have the big breakout through 20 pence. Nevertheless, we're still in a broadening triangle from back in November. Top of the triangle heading for 27 pence at the moment. Maybe if we start getting a move on, then that could be hit by the end of next month. Support looks pretty firmly entrenched around 16 pence at that uptrend line from January and the 50-day moving average. Below that, we've got the 200-day line at around 13 pence, but it doesn't look as though that will need to be tested. In fact, we haven't been below the 200-day line since the beginning of the year. On to a stock which I know has its fans, Bidstack, and here it looks as though we're just trying to break that line of resistance from back in January and the 200-day moving average at 3.25 pence. If we can break through that, then not only could we see 3.5 pence or 3.6 pence August resistance, we could then hopefully head back up to the March resistance area of 5 pence, perhaps by the end of next month. But looking rather better there for Bidstack at the moment. Stop loss on the break or the recovery argument just below recent support around the 2.8 pence level should cover it as we wait for potential move higher. Onto one of the more obscure stocks that I look at here, Clean Power Hydrogen, has all the right things in its name, and another stock which looks like it's trying to break its recent downtrend, that resistance line there from March around the 45 pence level. Above that, looking for 55 pence, especially driven by that rising 50-day moving average, of which the shares have just bounced to start the month around 43p. So above 43, looking for 55. We're in 57 pence over the course of the rest of September, and bullish divergence line there as well, which is the reason I covered the stock on a previous occasion. On to first class metals, which I think I covered yesterday, and it's already hit the rather modest target I had. I think the shares were around 9.5 or 10p. It doesn't really matter now. But big thing here now is how far the shares could fly above the floor of that rising trend channel, which is currently around 10 pence, looking for perhaps 15 or 16 pence by the end of the month, and perhaps even more, because it does look as though, as I said before, the slack has been taken up after the initial trading in the shares. Another relatively obscure stock is GYG, and here we're backed by the bear trap below the second low for August, which is a bear trap below the initial support. Bullish divergence there, which is why I was covering it, I think, quite recently, and a gap higher. So we've had an bear trap island reversal that targets the 200-day moving average around 37 pence by the end of this month. Another stock which is obscure but doing well is MC Mining, which I think I've been covering for quite some time, maybe from even below the 10p area. We're now looking for, above 14.15. We were looking for 23 pence, and it looks like we'll get that hopefully by the end of this week. The next game to play is what the next target might be after the 23 pence area, and that could be derived by a line of resistance I'm drawing there from back in March, and one draws a lower parallel as well. You can see that above 15 we're looking for as high as 35 pence for MC Mining, perhaps by the end of next month. So this looks like one of those big positive movers that one is always looking for. Stock which hasn't quite been in that category up to now is Okyo. Here we've got progress though with the final bear trap below the June support, so that was just down to the 2.5 pence. So that was, or it's already been spotted. We've got a rising 50-day moving average as well. Initial target here 4 pence, and which seems to be quite likely. And if we can break that, then it's up to the 200-day line around 5.25. The last time we were above that was back in May, so it would be quite a turnaround. But it looks like a nice U-shaped recovery there for Okyo, and a bit of bullish divergence there after that lower low that we had there at the end of last month. On to Shield, which is also in recovery mode here. We've broken the 50-day moving average in the middle of last month. We broke a line of resistance there in January, and the target here up to the 200-day moving average at 20 pence, maybe as soon as the end of next month. That nice U-shaped bull flag there should be enough to get us to 21 pence by the end of September. Just a few stocks to go now. First is one that I don't think I've looked at for a long time, Trellus Health, and here the reason for the inclusion is a mixture of the shares delivering bullish divergence, which they did with the July-August price action, so lower lows for August and higher RSI trace, which is great. And now we have broken recent neckline resistance around 8.5 pence. That suggests that we could at least get up to that gap on the way down back in July at 13 pence by the end of this month. Stop loss just back below 7.75 pence should do it. So above 7.75, looking for 13 or 14 by the end of next month. On Trellus, stock which is also delivering the goods on an almost daily basis is Union Jack. A great recovery here, and I think the patience of holders certainly rewarded as well. We were looking for 40 pence as a target going into September. Now it looks like we could get 47 by the end of this month, and the upside certainly valid while we hold above that late August peak at 36. So above 36, looking for 47 to 50 pence by the end of this month. Onto a stock which I think has got the bears slightly upset at its the strength of its recovery, which is always fun. Here we've broken that late June resistance around 1.5 pence, they call it 1.5 pence. Above that, the initial target here up to the 200-day moving average at 2.4, and then maybe by the end of next month to really upset the bears up to 3.5 pence as a best case scenario. 50-day moving average already rising at 1.3 pence, so that does suggest that we've got a bit of momentum here, and we've had a bullish divergence line in the RSI window, as well as that final bear trap low below the 1 penny area that we saw last month. So it looks as though the shares have effectively doubled there. So it looks like that was a selling climax. Finishing off with Zinnwald, which I think had some news today. Here you can see that it looks as though we're in a rising trend channel. We've broken a line of resistance there from June around 9 pence, and end of day close above that could take the shares up to 12 pence by the end of next month, or even sooner. Stop loss back below 8.5 pence and the now rising 50-day moving average. Great bullish divergence there from June, July to get the whole thing going. So this does look as though it will have legs. That's it from me today. More updates tomorrow.